Hello everyone, I'm Shana Morale with Tax Analysts. Thank you for joining us today on Facebook Live for the latest installment in our weekly discussions on tax reform. Now today we're going to discuss something that's been in the headlines a lot lately, and it is the alternative minimum tax, or the AMT. Now this is a second layer of federal taxation that applies on top of the standard income tax. The idea is that you calculate your tax liability under both systems, and then you pay whichever one is higher. Now there's actually two AMTs. There's the individual and there's the one for corporations, but for the purposes of today's discussion, we're going to look at the individual. Now, many of the recent tax reform proposals that have been floated in recent years have called for the elimination of the AMT, but that's not exactly why it's been in the headlines recently. The AMT played a very big part in the discussion around President Trump's tax return disclosure. So we're going to take a look at what the AMT is, and to help us get a sense of that, I am joined today by Jeremy Scott, Editor-in-Chief of Commentary. Thank you for joining us again today.
Thank you.
We always like having you on the show. So to get started, let's take a look at what is the AMT. It's often described as a separate parallel tax system. But the first question that comes to my mind is, why would we even need a parallel tax regime? What's wrong with the regular income tax, and why wouldn't we just fix that?
So the AMT has a pretty interesting history. It came about almost as the result of an offhand remark in the 60s, and it's grown to be something that affects a lot of people. So basically what happened is, in the income tax's earlier days, in the 60s, after the expansion of it in World War II, the Treasury Department reported to Congress that 155 very wealthy taxpayers had paid no income tax.
Oh, wow.
And Congress became outraged, and so they very quickly cobbled together what they referred to as a minimum tax, which was a method of calculating tax that claws back several deductions, or most deductions, to make sure that people were paying something. And so in 1969, the AMT was passed by Congress, and we've had it ever since, although it's sort of expanded beyond what was originally intended. It's less of a surtax on the super wealthy, and now it's kind of more of a tax on people who over itemize, and so we'll get into a little bit later about some of the unintended consequences of it and who's actually affected. But the reason that Congress originally brought the AMT into play was to make sure all taxpayers are paying, particularly wealthy taxpayers, are paying some level of tax, that they have some skin in the game and aren't using sort of every deduction available to zero out their tax liability. And so it was put in. It's a fairness thing. It is to make the tax system seem more progressive, maybe even to be a little bit more progressive, but it's definitely in there to sort of fix holes that people found in the income tax and have never really plugged.
That makes sense. All right, well, if it's originally designed to only affect a small amount of taxpayers, just like you just said, and that what explains the fact that it now affects all these other taxpayers? Was this a conscious policy decision by Congress?
No, it definitely wasn't. And so because the AMT was sort of put together to fix a very unique problem, i.e. a small number of taxpayers not paying taxes, it's not incredibly well crafted in order to hit that small target. And so basically what happened is, when Congress put it together, the first mistake that they made was they did not index it to inflation. And so essentially every year the AMT would reach more and more people just because wages, the economy is growing. And so that was definitely not a conscious decision by Congress. But also, Congress did not quite understand how all of the clawbacks of these deductions were going to work. And so what we have now is, as I was saying earlier, the AMT is less a tax on the super wealthy, and it's more becoming a tax on people who just happen to have a lot of deductions. And in fact, as the Tax Policy Center has pointed out, the people most affected by the AMT are upper middle income earners with multiple children who live in high tax states. And the reason is, if you have a lot of children, you're claiming a lot of exemptions, you have a lot of deductions, and if you live in a high tax state, you have a large state and local tax deduction. And so when the AMT zeroes that out, suddenly you're paying a lot more tax under the AMT than under the regular tax system, and that's how you get up to almost 5 million people being affected by it. In fact, sort of a quirky number here, if you left the state and local tax deduction inside, like if you allow people who are under the AMT to still claim it,
Okay.
the number of people affected would drop from about 5 million to 400,000. So
Wow.
the real flaw in the system, what's sort of expanded it beyond, is, like I said, the interaction of child-related
Sure.
deductions with this state and local income tax deduction.
Very interesting. All right. Well, what are the major differences in the two tax bases? What are deductions or exclusions that the AMT won't allow? And can we identify those people who are most likely to feel the pain of the AMT, like those with lots of children in high tax states? And is it really fair to single them out for, harsher treatment?
Basically, the easiest way to think about the AMT is it takes away pretty much all your deductions. This isn't entirely true. The main ones affected are state and local taxes, as we said, depreciation, you don't get a personal exemption, you don't get a standard deduction. Medical expenses, you can only claim if they're over 10% of your income, which is a much higher threshold than under the regular income tax system. And so when you claw back all of these deductions, then you recalculate your tax liability and you pay tax on the income that's left. And so what it was designed to do, as we've said, is people who were using deductions to essentially zero out their income, it was designed to catch them and make them pay tax. And it was hoped that this would be mostly wealthy people, the idea being, if you're making millions of dollars or hundreds of millions of dollars, your effective tax rate doesn't matter too much because you're still going to have millions of dollars left. So is it fair to single those type of taxpayers out? Well, Congress thought so. They wanted to make sure wealthy taxpayers are paying tax and not realizing millions of dollars in income and then not paying any income tax. The optics of that were bad in the 60s. They would still be bad today, which is one of the controversies over sort of the Trump tax return, Romney tax return. That's the idea of our wealthy individual taxpayers paying their share. Is it fair to single out people with lots of children who live in high tax states? That becomes a little bit more difficult to justify. Obviously, this is an unintended consequence of the tax. There's no real policy reason to go after that group of taxpayers. And so probably they shouldn't be having a harsher tax treatment under the alternative minimum tax than they do under the regular income tax code. The problem is, again, how do you craft an AMT that hits the rich but doesn't hit these people? And it's just difficult, and as you sort of alluded to at the beginning, the solution most people come up with is, well, let's just get rid of the AMT, but it's never happens. The AMT continues to chug along, it affects more taxpayers every year, and most people think it's unfair, the group that's being hit, so it remains very unpopular.
I can see why. So it seems like the AMT has a lot of critics. Some politicians, as we mentioned, openly talk about wanting to eliminate it. We've actually heard that a lot lately. But it does result in the overall tax system being more progressive without raising the statutory rates. So how would you summarize the various policy arguments for it and against it?
Well, the arguments for it are the idea, again, to make sure that people pay a certain minimum tax, particularly when their incomes are high. There is a very good policy argument for something like a minimum tax. So the idea that if you make a certain amount of money, you shouldn't be able to use even legal deductions, credits, and things like that to totally zero it out. So a backstop to the tax system to protect from aggressive tax planning or even just unintended consequences of the interactions of various credits and deductions is not a bad idea. Then you alluded again to the policy reasons for it. It makes the tax system more progressive. It helps fix this idea that at the top of earners, you do have this drop in the curve, or the effective tax rates get lower for people at the top. That is primarily because of capital gains preferences, but a minimum tax can help with that as well. The argument against it is it doesn't really have a good economic justification. It doesn't have a good policy justification. It doesn't fit with the income tax. It undermines a lot of the justifications for the credits. If Congress intends to encourage us to have children, it doesn't make any sense to claw those back. If Congress intends to ameliorate living in high tax states, it doesn't make any sense to take that back. If Congress wants us to be able to deduct our medical expenses, it doesn't make much sense to restrict that. So the AMT on a theoretical basis, it just doesn't fit. It's a very sort of broad sword to use to attack a very targeted problem. And so this particular version of an alternative minimum tax probably would never be designed if you were starting a tax system from scratch. It's just something that was slapped in as an expedient, and it's survived. And so that's why you hear a lot of arguments in favor of getting rid of it. The problem with and I think you would get almost any lawmaker to say, yes, let's get rid of the alternative minimum tax. The question is, how are you going to then solve the problem that it was designed to do? How are you going to fix the tax system to make sure everyone is paying their fair level of tax? And that's where Democrats, Republicans are going to diverge.
Absolutely. Well, it's a complicated question.
It is a complicated question.
All right. Well, in its current form, does the AMT bring in a lot of revenue for the IRS? And if so, wouldn't it be expensive to completely repeal it? Given the size of our current budget deficit, can we even afford to repeal the AMT?
Well, the AMT brings in about $35 billion a year. Just as a matter of comparison, that's 2% of revenue. It's more than the estate tax, which is closer to 1%, far less than the corporate tax, and then not even on the map when you talk about the regular income tax system.
Sure.
So could we afford to repeal it? Yes. It used to be that repealing it cost a lot more, but then in 2012 they fixed the inflation issue, so there's no the AMT used to be projected in years beyond the first couple of years in a budget cycle to bring in lots of revenue, which made repeal get very expensive. That no longer is the case. You could repeal the AMT, and like I said, it's only going to cost about $35 billion a year. Again, I think the concerns aren't so much with what it would do to the deficit, it's what it would do to the perception of fairness in the tax system.
Absolutely.
So it's not expensive in terms of dollars, but it might be expensive in terms of public perception, particularly if it starts to get out that there are suddenly a lot of wealthy taxpayers without the AMT or paying nothing. And we'll get to one particular wealthy taxpayer who would have paid basically nothing without an AMT.
It, yeah. So you alluded to it. Let's talk about it. We have to, and this is the reason it's in the headlines. President Trump, his tax return from 2005 was released recently, somehow. So let's break down what we know about his recently disclosed tax return from 2005, in which he paid a lot of AMT. Yep. What do those numbers teach us, and is there a lesson we can learn from his tax return?
Well, I think the president's tax return actually shows why you need an AMT, and this is an example of the AMT functioning in the way it was intended. So, yes, Trump's tax return was somehow disclosed to David K. Johnston, a reporter who went on Rachel Maddow's MSNBC show. It was not the bombshell that Rachel Maddow led people to believe, or some may have been hoping. In fact, it's a pretty uninteresting tax return for a wealthy individual. It showed $153 million in income. He paid $5 million in income taxes, and he paid $33 million in AMT. So with the AMT, his effective tax rate was about 25%. Which isn't that bad. 25% is pretty good for a high-income individual, particularly one with a lot of potential capital gains, real estate income, which can be sheltered. Just as a comparison, 2012 Republican presidential candidate Mitt Romney had an effective tax rate in the teens, so Trump's paying a lot more than Romney. So it didn't show he was paying zero in taxes, didn't show he was paying a ton in taxes, didn't reveal any of the more sordid stuff people have been looking for. But what it does show is it showed, like I said, the AMT in operation. Without the AMT, Trump's effective tax rate would have been about 3%. And so that would have been,
difference.
Yes, a massive difference. And
so
that
it worked here.
It did. Trump had a lot of deductions, a lot of losses, over $100 million in losses. We don't really know where those losses came from. The president says they were mostly real estate depreciation, which makes sense. He probably had some conservative easement deductions, maybe taking a charitable deduction for donating a portion of his property for conservation, which is somewhat controversial type of deduction. Probably some of the losses that we knew about from the 90s when the leaked tax state tax returns were being claimed there. But anyway, his deductions really brought his income down. So that's where the AMT kicked in. It kicked in to force him to pay more tax because the optics of someone earning over $150 million a year paying only $3 to $5 million in tax, 3% of his income. It's not good. So here's a case where the AMT hit a wealthy taxpayer who was taking advantage of a lot of deductions. And so you can argue again, well, wasn't Trump entitled to deductions? Maybe, but the AMT is in place to make sure even with deductions that people pay some tax. And so that's why we're talking about it, is because Trump's return kind of brought it into focus. Yeah. But in contrast to what some people said, this is not unusual. This is not, there's nothing wrong with paying AMT. This is what the AMT is designed to do. The sort of only thing that maybe you could look at is Trump is calling for an elimination of the AMT, Republicans are calling for an elimination of the AMT, and that would directly have reduced his tax burden to almost nothing. But again, calling for elimination of the AMT is not that unusual, and it's unlikely he had his own tax returns in mind when he was talking about it.
It's happened before,
yeah.
So. All right, well, let's talk about it. If you could make a prediction, do you think that a tax reform bill that comes up sometime soon would include a full AMT repeal?
Well, all Republicans' plans call for a repeal of the AMT, and they traditionally have done it for a long time.
Okay.
Virtually any campaign plan that's put out by a Republican presidential nominee has talked about eliminating the AMT. Whenever you hear broader tax reform discussions going on the Hill, elimination of the AMT is a part of that. So I would say the chances are very, very good. Almost any bill that Congress takes up is going to talk about AMT repeal. So if you're starting with the House blueprint, for example, if you're going to pass anything that radical of an overhaul of the tax system, the AMT is going to get scrapped. And on the surface, that makes sense. If you're going to attempt to fix the problems in the income tax system, if you're going to change how you're taxing business income, there's no reason to leave this patch, this sort of backstop in place. Fix the problems at the front and don't worry about an AMT.
Sure.
If these plans start to get scaled back, if they become more of just a tax cut, if the Republicans decide we can't overhaul business taxation, we can't radically change the income tax system on the individual side, you may see the AMT stay because, again, they may not want to address all the deductions that go into causing someone's tax liability to drop to zero. You may not want to get rid of the mortgage interest deduction. You may not want to get rid of the state and local tax deduction. You may not want to deal with depreciation. So instead, just lower everybody's rates, leave the AMT in as a backstop because you don't necessarily want to address the things causing it. That's a scenario where the AMT could survive, but it's most likely that if Congress passes anything, even rate cuts, the AMT will be a casualty, much like the estate tax, because it's just not that expensive to get rid of. It's a Republican priority, and there's just not a lot of theoretical evidence backing it up. So.
Well, I guess we'll see. Maybe the AMT will not be around for much longer, if we get this tax reform sometime soon from Congress. So thank you for talking with us today. I think I learned a lot about the AMT that I didn't already know. And I hope you did too. So thank you for joining us today, and we will see you next week.